You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Once we see a weekly close above 1850, I think that's when gold will start to be off to the races again.
Welcome back. I'm Bill Powers. It's Mining Stock Education, and I'm joined with my friend David Erfle of JuniorMinerJunkie.com. David writes one of the top newsletters in the junior mining world. If you're not familiar with it, head on over to his website, sign up for his free email as well to get his commentary on what's going on in the gold and mining space. David, welcome back onto the program. Looking like we're having a pop in gold and silver in the miners right now. Please start off by providing your commentary of what's going on in the precious metals.
Yeah, Bill, it's starting to get interesting again. Thanks again for having me on. It's always great to talk to you. You always ask me the best questions, so I'm always glad to speak with you. But yeah, it's really starting to get interesting. It's amazing. I've been in this sector for 2 decades now. I'm surprised my hair's not white, but the last day of the quarter, I was building up cash along with a lot of people into the last day of the quarter. I was watching the gold price go lower, and I'm saying to myself, wow, they're doing everything that they can to get that gold price back down to that 1675 area. And it sure looks like it's going to take place. And then the very last day of the quarter, we had a huge reversal, came out of nowhere. We had everybody and his brother, on the bearish side of the boat, including myself. The gold price got back over 1750 on a weekly, monthly, and quarterly basis that week. And the gold price has been going up ever since. Well, it's basically traded in a range ever since, a tighter range, but it's going up and it's past 1800 now. But what was especially telling was that is the day that the gold miners and silver began to lead. And when that takes place, especially after such a deeply oversold situation, you start to take notice. And we had the bear camp was extremely huge at that time, and you couldn't find a lot of bulls. And I started to deploy my 25% cash position, and I told my subscribers, look, this is as black bearish as I can get, I think, here, and this is a great time to start scaling into some of these things on our watch list. Also something happened this past Friday when we had Jerome Powell speaking on this virtual conference. The sound quality was really bad, but it was the last time he was able to speak before the blackout period starts until the next FOMC meeting on November 2nd and 3rd. And he basically said, hey, look, okay, inflation's not transitory. Okay, these bottlenecks are going to continue. The supply issues are going to continue. So basically, it's going on. It's going to go on for a lot longer than we expect. And of course, everybody in our sector pretty much knew that. But he'd done a great job of convincing the marketplace that inflation was transitory. We're going to raise rates. Look at the stock market; it's still really doing well. All's good. So basically, you don't need to hold any gold and sell your mining shares. But ever since Friday now, the gold price is gotten back above 1800, and there's really strong resistance at that 1835, 1840 level. And I think once it gets above there, then you're going to see the gold price start to break out, and the catalyst could be the actual taper announcement on November 3rd, because it's all baked into the cake now. It's all priced in. They started talking about tapering in June, and that was the time where everybody in the precious metals mining complex said, you know what, I'm selling my shares for tax loss now because I'm down on these things. My timing was wrong. I'm going to go ahead and sell for tax loss now, and then I'll get into them later when I can get a better price, and I can take the money and put it into the stock market because it's continuing to go higher. So that's pretty much what happened. And I think a lot of the tax loss selling is done now. We usually have this tax loss selling event in late November, December. And I think that's pretty much all done now. We're short-term overbought now in the mining sector, and we could see some sideways to downward pressure now, some profit taking coming in. But, I'm pretty sure that we've seen the lows now in not only the gold price, but in the mining sector as well.
When you see a major low, like we saw in March of 2020, or we saw in January of 16, can you identify that low within 30 days based on your experience?
It's really difficult in this sector, but we could take a look at history, as far as interest rates are concerned, because what happened with the low in 2015, the mining low happened in the second week of 2016, but the gold price hit its low in December of 2015. And what also took place in December of 2015 was the Fed finally raising rates after threatening the market that they're going to raise rates, they're going to raise rates, they're going to raise rates. And once that takes place, it's basically the Fed admitting that there's inflation, and it's by the news event. And the gold price really starts to move up. I mean, look what happened in the mid 2000s. When the Fed raises the Fed funds rate to 1% to 5.25%, the gold price doubled. But look what happened in the 70s when we had stagflation, and we're starting to see a lot of stagflation right now. Arthur Burns was saying the same thing, the Fed chairman at that time. He was saying, inflation's transitory, it's not going to remain high. And that's when they started to do these hedonic adjustments in the CPI, switching things out, taking things off the list to try to mask the inflation, because it's all about confidence. It's a confidence game, right? When you get a fiat currency, it's a confidence game. So, and that's another reason why I think the gold price is about to take off here, because nobody's really talking about the marketplace losing faith in the Federal Reserve, because they've basically lost faith in the Fed saying that inflation's transitory and it's going to come back down. I mean, he kept saying that, yeah, it's gonna come back down to our 2%, 2.5% target. I'm like, really? Everybody, and at the same time, you had the sword of Damocles of the rate hikes coming and the taper coming, hanging over the gold price. So technically, it's come down and it's tightened now in this consolidation triangle. And like I said, the last day of the quarter, it remained in that triangle. Gold does everything in its power to get everybody off the bull before it takes off again, and it did a really good job of that again last quarter. So I think that that symmetrical triangle is squeezing now, and once we see a weekly close above 1850, I think that's when gold will start to be off to the races again.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
Even with interest rates, we see gold and interest rates going up historically at the same time, don't we? Even if they raise it. Yeah. Exactly.
Yes. And, I brought up 2015. What happened in 2015 was, that was the end of a brutal bear market in mining stocks. The GDX went down 85% in like 3 years. So, but once the miners actually bottomed in July, and then they made an accumulative flat bottom, right? 6 months before the Fed actually announced a rate hike. So now I think the same thing has a chance to happen here, where they're going to make an accumulative bottom before the Fed actually does a rate hike, even if they can, because the market is priced in a 50% chance of a rate hike starting in June of next year now. And that's On the CME FedWatch tool, it's going up bit by bit. So, like I said, I think that the actual taper, the physical taper, might be a buy the news event and could get the gold price up to that 1840, 1850 level. But what's going to be the catalyst to break it out? And I think it's if we look at the stock market, it may have double topped here. The Dow and the S&P and the NASDAQ, they may have double topped here. I don't know. The marketplace is littered with people trying to call tops in this thing. It's bankrupted hedge funds trying to short it for the past few years. But I think that there's a real chance of that, because once they start tapering, that's monetary policy starting to taper. That's a psychological thing, starting to tighten. Monetary policy starting to tighten, which the market needs right now. It needs that QE. So it's going to be interesting to see how the market reacts, because I'm pretty sure that taper is priced in. So we'll see, not next Wednesday, but the Wednesday after, on whether they're actually going to taper, and what the language is going to be when they do taper, and what the market reaction is going to be. I think it could cause a lot of selling in the stock market. And I'm sorry, I got to add one more caveat. I know this is a long-winded answer, but the Fed has also announced they're going to be raising tax. I mean, the government, the Biden administration, they're going to be raising taxes next year. So you could see a lot of profit taking toward the end of the year.
Dave, on that, when they're talking about taxing us on our unrealized gains.
Exactly.
Oh, wait, of course, it's just the billionaires to start off with, but that's what they told us about the income tax too, right? Like, it's just the rich people.
That's what the Fed told us about the income tax, when they initiated it back in the early 1900s.
Yes. So can you and I pay tax on our unrealized gains with our unrealized income? That's what I want to know, because if I can, I'm fine.
Exactly. And, why do we have to, why do you think that raising taxes is going to help anyway? I mean, it's, it hasn't in the past. I mean, the country was formed on people running away from paying too much tax, and you're just printing up the money anyway. So why can't you just print up a little more? Why do you need to squeeze us so much? But anyway, that's another story for a different time, and a big reason why we're in this sector. But I think you're going to see a lot of smiling faces finally in this sector, in the next 3 to 6 months.
Well, you have some large unrealized gains in one of your little junior miners that you bought and wrote up about 2 weeks ago. If you wouldn't mind just sharing that with listeners, just for educational purposes. Why did you, choose this one, and then why has it skyrocketed 90% in 2 weeks?
Oh, sure. I think the stock you're talking about is Bear Creek Mining. It's, first of all, I have a very intimate relationship with this stock. I've been in and out of it for the past 15 years or so, and it ticks all the boxes, is what you want to see in a developer. But it's in Peru, and we've had this Peruvian situation, this political situation where Pedro Castillo is very, very far left, and he was pretty much touting all these socialistic things that he was going to do and to get elected. But he understands that he can't squeeze these companies too much, because it'll just force them out of the country. So, Bear Creek has this project, this Karani project, which is, one of the largest undeveloped silver projects in the world. It's got a huge zinc credit. Now zinc's over $1.60 a pound. And it's shovel ready. They're just waiting to get it funded. And they've also had, these COVID restrictions. They haven't had anybody they haven't been able to have these bankers and such come out on the property and sign off on a loan. So you've had that, along with the political backdrop, took the share price down to a ridiculous level, to where all this was pretty much priced into the stock. And I watched it come down to where it was trading at its March 2020 panic low, right? And I saw a double bottom on the stock from back then, and also 2 weekly hammers on the stock. And I talked to the company, and they were buying shares too. Management was buying shares. It's got a really tight share structure. So, you got a junior that was ridiculously oversold. You got a situation that is getting better in Peru, where they realize, that they've got to lighten up on their rhetoric to get the money into the coffers to actually help the people. So they can't squeeze too much. So the political situation has gotten a little better there. Earlier stage, maybe not. Consultant previas are still going to be difficult to obtain quickly. But as far as a project like Karani, which is shovel ready and all it needs is the financing, now that and fortunate for me, they came out and Castillo came out and made an announcement that they support the project. Right after I issued the buy.
So there's 40% of your 90% move, right?
Exactly. So it ran up from 92 cents to resistance at $2 in a couple of months. It's up like 80% in October.
A couple of weeks, though. It was a couple of weeks, Dave, not months, right?
It was a couple of weeks. Yeah. So it was fortunate that I got in at the right time. It was fortunate that I'm very familiar with the stock. And I was watching it like a hawk, but that's what I do, and that's what I love to do. I watch these companies, and I know them very well. I've been in and out of them in the past. Some of them maybe that I haven't been in yet, but I have great dialogue with management. I keep up to date with what's going on, so I usually have a pretty good idea of when to get into them. And I've got into a couple others that have gone up quite a bit too. So. It's starting to get exciting again, like I said. So this is a great time to be in this sector. If you're not, and if you have a bunch of cash on the sidelines waiting to deploy, this is a great time to do it.
And that's an excellent example of what you've taught your subscribers and also my listeners over the last 2 years, where you said, prepare your list in advance for those sell-offs. And then you just monitor those key stocks that have good people at the helm, good fundamentals. You have historical understanding of how the stock reacts, and you get in at the entry point and you make 90% in 2 weeks. And, that covers.
It's gone up 90%. I haven't made it until I sell.
Well, Washington, D.C. says you made it. They're going to send you a tax bill. But this sector turns around on a dime, especially when it's so deeply oversold and out of favor. Nobody cared about gold stocks 3 weeks ago. Yeah. That's exactly it. M&A. So there's been some M&A recently. You've also been affected with this in your portfolio. Is this a good sign for the sector?
Yes, very good. It's this morning, Calibre Mining, which is in my top 10, announced that they'll be taking over. It's a friendly acquisition. Both boards approve. Fiore Mining, which was on my watch list. I was waiting for a better entry point on that one. It never came. And I told my subscribers, sure, it would have been nicer to be a Fiore shareholder, but I still approve the merger. It's a great deal. It diversifies their jurisdiction because they're in Nicaragua, and there's a little worry there as far as the political situation is concerned. But, the mines that they obtained from B2 Gold was a company maker, made B2 Gold what it is. And there's still a lot of gold there, and they're doing everything they said they were going to do there. And more. It's a hub and spoke operation, and Fiore looked undervalued already, and they pounced at the right time. They're getting a good price, and it's I wouldn't be surprised if this company once I think it's going to be approved. I think the approval will be at the end of the year, beginning of next year. That company will be a takeover target as well. Because it's very low cost mines and no debt. They'll have $96 million and no debt. So it's a really good deal for both shareholders. Better for Fiore shareholders right now, but in the long term, it'll be great for Calibre shareholders too. And I already told my subscribers I'll be adding a little bit more to my position on this weakness. I think it might get a little weaker here.
And did you like the Agnico Eagle Kirkland Lake deal as well?
Oh, yes. That was a fantastic deal, too. I mean, it created the third largest miner in the world and lowest cost. They're all in great jurisdictions. This is the goal. If I don't invest in majors, but if someone held a gun to my head and said you had to buy a major, it would be Agnico. I mean, they've got, 2.3 billion on the cash on the books, 48 million ounces in the ground in top tier jurisdictions, great management, low cost mines. Yeah, I mean, it ticks all the boxes, and they pay a dividend of almost 3%.
Yeah, not bad. Valuing developers, Dave, you mentioned the inflationary environment we're in. Last question. How does that affect how you analyze developers? You bought a developer in Bear Creek, right? Because they still need to do their financing. And I guess you could answer it by sharing how you're going to play this one, because they could dilute with their equity and debt package, in a month, and the stock could be dead for 2 years. Like, what's your advice with investing in developers?
Oh, it's, they've already said that the dilution's not going to be that much. They've already got 30 million. It's going to cost 525 million to build the mine. The equity, they said, is probably going to be about only 10 to 15%. They could stream some of the zinc. And
cost projections, you gotta have to throw that cost projection out, right? Though the capex.
I mean, pretty much. I mean, all these feasibility studies that were done recently. I mean, not recently, the ones that were done a year or so ago. I mean, throw them out the window. I mean, everything's gone up so much. Steel has gone up so much. I mean, everything that is incorporated in a study, as far as capex is concerned, has gone up so much. But I expect the gold price will make up for a lot of those costs. And you also have to consider that AIS, all-in cost of production average only has gone up from like 1040 in Q2 to 10 in Q1 to 1067, I think, in Q2. It's going to go a lot more in Q3, I think. But still, even if it gets up to 1,100, that's still $700 less than the gold price. So
but they still need to raise the capex, though. That's going to be a bigger hurdle, though.
Capex will have to be raised. Absolutely, yeah. And the markets the capital markets have remained accommodative for the good projects.
But if interest rates are going up, inflation, higher capex, I guess I'm saying it could just be careful with developers, right?
Absolutely. Yeah. Definitely be careful. I mean, you always have to be careful anyway, but this is where management, again, comes into play. Make sure these guys got access to capital, and they've done this before. They know how to build mines. They've done it successfully before. And, because a lot of these projects, the projects look fantastic, but you look at the CEO, and he's maybe a geo, and he doesn't have any mine building experience or something. I mean, you got to look at the experience of management, and especially if they understand. Look, they might say, "Look, yes, we understand that we're not mine builders, and so we know we have to. Once we get to the feasibility stage, we're going to have to start hiring mine builders that know what they're doing." Because you don't want to hire that board too soon, because you're paying all these guys for nothing. You want to get them when they get close to that stage where they're going to get close to construction, or get close to a mine plan. But I mean, because look at these miners. I mean, they're trading at 5 times cash flow. And in the past, Joe Foster just did a great webinar. A fund manager, Van Eck, just did a great webinar. And he put up a chart of whenever the gold stocks get to 5 times cash flow, that's when we see a bottom. We've seen it a few times during this phase 2 run up that started in early 2016, and they actually got up to 20 times cash flow during the last bull market. They averaged about 15 times cash flow in 2010, 2011. And
is that the majors he's referring to?
Yeah, that's the majors and the mid-tiers, the miners. Yeah.
So there's another sign.
Yeah. I mean, there's so many of them.
Well, I hope we're right. I hope we're right for the sake of my portfolio and a lot of listeners, Dave. Always appreciate you coming on the show. Thanks for your insights. And if you don't know or haven't been to David's website, again, juniorminerjunkie.com. Thanks for joining me, Dave.
Thank you, Bill. Always great to talk to you, and good luck out there to all your listeners with your watch list that are hopefully you've cobbled together, waiting for this time, because this is the time to start really sharpening the pencils and getting into the right ones, because one by one you're starting to see them take off. They don't all bottom at once. One by one they take off. So Best of luck to everybody.